How much house can you afford anyway? Let's find out. And what you can qualify for and what you can afford are two different things, but let's look at the qualification aspect first. With an FHA loan, you might be able to spend about 40% of your monthly income on a house payment. And if you have decent credit, you might be able to spend another 10% of your income on existing debts like car payments and student loans. Now this turns out to be a 50% debt to income ratio, or DTI. Now honestly, that's stretching it a bit because you're spending 50% of your income before taxes on a house payment plus your other debts. So let's say you want to stretch your budget a little bit, and assuming you qualify, which everybody won't, but let's see what it might look like. So let's say you make $75,000 a year, or $6,250 a month. 40% of that would be $2,500 a month, which is what you might be able to allocate towards your house payment, including principal, interest, property taxes, homeowners insurance, and potentially HOA dues. And in this scenario, you probably couldn't have more than about $625 a month towards other debts. So that's a total of $3,125 a month, which is half your monthly income. Now keep in mind, we're talking about gross income before taxes, but that's how lenders look at your income, not after tax amounts. So if you qualify for a $2,500 house payment, that's where you go to your mortgage calculator, you plug in current interest rates, your local property taxes, homeowners insurance, and you kind of dial in what you might be able to afford as far as home price with that $2,500 a month. But what about other income levels? Let's say you make $100,000 a month. Well, that house payment potentially goes up to about $3,300 a month, allowing you to afford more. Likewise, a $150,000 salary would allow you to spend about $5,000 a month on that house payment, assuming that same 40% cutoff. Now, honestly, not everybody will qualify to spend up to 40% of their income, or they might not feel comfortable spending that much of their income on their house every month. So let's say we want to back that 40% number down to 30%. What does that look like for that original $75,000 income? Well, with that $75,000 income, 30% of that per month would be $1,875 that you could allocate towards your housing expense. Now, you won't know exactly what you qualify for until you get a full pre-approval from a lender. However, if you do take 30 to 40% of your monthly gross income, you might be in that ballpark of how much you can spend on a house each month.